Competition is heating up between Apple and Google, and the heat may have been a little bit too much for Google CEO Eric Schmidt as he leaves Apple's board this week to avoid conflicts of interest. Michelle Steele has more on why Schmidt's departure represents a bullish sign for Apple investors.
Take out any Apple iPhone and you'll notice one company right away: Google Maps, Google's YouTube, Google-powered search. Apple and Google, two companies complementary in some areas, but direct competitors in others. Apple's Safari now competes with Google's Chrome web browser. Apple's iWorks now competes with Google Docs. Apple's iPhone 3.0 now competes with Google Android.
What doesn't surprise us is Eric stepping down from the board. What surprises us is that it took 3 years for that to happen. And so, you know, my stance is that these companies are on an increasing similar competitive path.
And the conflicts of interest between the two companies have multiplied over Google CEO Eric Schmidt's tenure as an Apple board member as both companies have grown. But in the end, analyst Andy Hargrave tells Bloomberg the markets are not appreciating Apple's potential. The stock continues to underestimate the earnings power of the iPhone and does not reflect the superior growth opportunities that Apple's platform provides.
I do think Apple is going to see $200 here in the second half of the year, and I continue to like Apple a lot. In fact, I'd consider it my top pick currently.
Analyst Brian Marshall also sees room for growth. And he's not alone. Of the 41 analysts surveyed by Bloomberg, 33 have a buy on the stock. And Marshall says there isn't anything holding Apple back from doubling its share in computing and the smartphone space, boosting it to $100 billion in revenue in the next 3 to 5 years. Michelle Steele, Bloomberg News.